Below is your rewritten script in the same style, same structure, and nearly the same length, but with the name changed so it only uses John OG instead of OG John AG. The tone, pacing, and analytical style are preserved for YouTube narration. 52.63 million ounces against 81.73 million. Let that ratio settle in your mind for a moment. That number is not speculation. It is not a theory from an obscure corner of the internet. It is the live published warehouse data from the CME Group as of March 9th, 2026. And what that data reveals about the silver market right now should be the only thing on your radar today. Because in the March 2026 COMEX delivery cycle, demand for physical silver surged to 52.63 million ounces on first notice day alone. Meanwhile, the total registered silver inventory, meaning the metal that is actually available, legally designated and ready for delivery, currently stands at just 81.73 million ounces. Do the math. That means 64% of every deliverable ounce in those vaults is already spoken for in a single contract month. 1 month. And these numbers are not from last quarter. They are from yesterday. Welcome back. John OG here. Before I go deeper into the data today, I need to address something directly because if you're watching this video and you're unsure about where you are, I owe you clarity. My original channel, the one many of you followed for months, the place where this analysis began, was removed from YouTube, completely erased, the entire library, every subscriber, every video, gone. And what happened next made the situation worse. Within days, multiple fake channels appeared. Channels using my name, channels using my face, channels calling themselves John OG with slight variations, extra numbers, or altered branding. None of them are me. Let me make this absolutely clear. The channel you're watching right now, John OG, is the only place where this analysis is being produced by the person who built it. Every other channel using my name is an imitation. I have no control over what they publish, promote, or sell. Do not trust them. Now here is the part you need to hear carefully. There is a very real possibility that this channel could also disappear. I do not know when. I do not know how. But based on what happened to the original channel, I'm operating under the assumption that this platform may not be permanent. So here is what I need you to do. Stay ready. If this channel disappears tomorrow, next week, or during a delivery cycle the world needs to understand, I will find a way back. It may be another channel. It may be another platform entirely. But the analysis will continue because the information is too important and the moment we are living through is too critical. Pay attention to the community tab. Pay attention to video descriptions. Pay attention to pinned comments. If I have to move again, the signal will appear there first, and the window may be small. I'm telling you this now while I still can so that if it happens, you're not caught off guard. You already know what this channel delivers. You already know there's nothing else like it in this space. So stay alert. And let's make every video count while this platform is still available. Now let's talk about the market, because if you have been watching silver closely, you already know something is wrong. What we are seeing is not normal volatility. It is not a routine pullback. What is unfolding in the silver market right now is a structural collision between two realities. The paper price that trades on financial screens, and the physical metal that is disappearing from vaults faster than the system was ever designed to handle. Those two realities cannot coexist forever. If you want to understand what is happening in precious metals before the mainstream financial media feels safe enough to report it, you are exactly where you need to be. Now let's get into the numbers. March 10th, 2026. Silver is currently trading at $89.20 per ounce on the spot market, up roughly 2.5% from the previous session. Some price feeds are showing $89, $81, a 6% single session move. The number is moving even as this video is being recorded. Gold is trading near 5,157 per ounce. The gold to silver ratio currently sits near 58 to 1. Just 12 months ago, that ratio was above 100 to 1. In April 2025, it briefly touched 105 to 1. Silver has compressed that ratio by nearly half in less than a year. That kind of movement does not happen quietly. But the number that matters most right now is not the spot price. It is COMEX registered inventory, because that number continues to fall. To understand why 81.73 million ounces is the most dangerous number in the precious metals market right now, we need to go back to January 29th, 2026. On that day, silver reached $121.67 per ounce, an all-time nominal high. Just 14 months earlier, the metal was trading below $30. During January alone, silver surged 68%. Then, within roughly 30 hours of hitting that high, something extraordinary happened. The price collapsed. London silver fell to 71.67 per ounce, a 41% crash in less than a trading session, 41% in hours. But here's the question the financial media never answered correctly. After a 41% crash, Why is silver already back above $89? Why did the floor hold? And why did the COMEX vaults look more stressed today than they did before the crash? That answer begins with the Silver Institute's 2026 outlook. The global silver market is projected to run a 67 million ounce deficit this year. That would mark the 6th consecutive year of structural supply deficit. 6 straight years where the world consumes more silver than it produces. When that happens, the market must draw metal from above ground inventories, exchange vaults, ETFs, private holdings. That drawdown has been happening quietly for years. But in 2026, something changed. The demand profile shifted. Mine production is projected to reach about 820 million ounces. Total supply, roughly 1.05 billion, a decade high. Supply is not collapsing, yet the deficit remains. Why? Demand. Physical investment demand is projected to jump 20%, reaching roughly 227 million ounces. Western investors are returning to the metal. Coin and bar demand is rising across multiple markets simultaneously.